Okay, let's talk about Bitcoin and Mars stock the week before the FOMC interest rate announcement. We're going to primarily focus on risk management during this video because, and then secondary being the actual chart analysis based on my own opinion. But I always try to influence my risk management opinions, but I never prioritize it and talk about it enough. So I thought this is a perfect opportunity, right? Because Wednesday and Thursday we have very important data coming out, inflation and jobs report, which will further set the stage and give us much more realistic views for the week after this one, FOMC interest rate announcement, right? As of right now, like if I just had to guess, I'm expecting a 0.25 rate cut. But again, this Wednesday and Thursday we'll have a much better idea. I'm already expecting though so I'm gonna try to, and this is gonna mostly affect Bitcoin rather than Mars stock, but there's still some influence to it. But the question is, right, like I believe the market is anticipating a weak jobs report. When it comes to inflation, I believe it's not going to be that weak. Um, there's just still a lot of things in the background that are the same when it comes to what's making me look at inflation to be mostly the same for the most part. But the jobs report, I am expecting it to come in weak. But again, we'll have a better idea on that. So when it comes to Mars stock, right? So just for some context, if you guys are new, when it comes to the bigger picture Mara stock chart, you guys already know, right? I have a uptrend I'm keeping a track of. Every red accumulation zone is an opportunity for a higher low that can, allow the price to continue higher into our next target area. So previously, just for some context, um, and again, everything in this video is just my own personal opinion. I like to share with you guys what I'm looking at, what I'm thinking, um, document it. It's up to you guys to do your own due diligence and make your own trade decisions. But again, I've been calling these red areas as like strong accumulation zones. They're pretty much solid for the most part. A nice accumulation with the value gap as take profit. We had a second trade opportunity, blue extension take profit. This time, after the low was established earlier this year, we are now in another higher low potential accumulation area. These red zones, except this one, this was an extension because I had this one here that got crushed very quickly. So, I never got much exposure into this area because again, the moment the price broke below the bottom boundaries, like it was time to get out. There was a secondary opportunity that one worked out nicely, briefly breaking into the take profit zone. But having this weakness here, if you guys remember, if you guys been watching, I created this area as a strong potential for an actual low to be formed, and then it worked out nicely. Higher low opportunity, extension, take profit. We're in another higher low opportunity, which is again, these ones are just retracement zones following the price up. So like if you look at this one, it goes from the bottom all the way to the top. And the way this influences risk management, this one's the same from the overall bottom to the current top. The reason this is part of my risk management is because when I'm trading the bigger picture, we're looking at multiple months right here on the 1 hour chart. So using bigger picture and bigger overall trends to establish potential support zones is basically removing a lot of the noise in the short term. That's why I really like to focus on the bigger picture trends, and I never really focus too much on the short term noise for the most part. It's much more like conservative. These swings in the bigger picture tend to hold better than swings in like the micro picture. So that's why I have another accumulation zone right here in red. And the idea here is that in order for this uptrend to be broken, because we're looking at the bigger picture, I have a swing low right here that I am keeping track of with this yellow line for illustration reasons at roughly $13.45. So the point of this is risk management, right? Is knowing where in the bigger picture my SLs should be placed, because since this is a bigger picture trend that we're keeping an eye on, if we break below the swing low, the uptrend, in my opinion, will be invalidated, and we can easily close the gap to much lower prices, like well below $11 potentially, before we find a solid support. So this is if that were to happen, that would invalidate the uptrend. But since it's not happening just yet, it's just there to remind us that hey, there's always a possibility for trends to reverse. So as of right now, since we don't have that, the idea is bigger picture support area in red. If this holds, then we have a resistance area in yellow, also overlapping very nicely with this pretty like noticeable value gap on the hourly charts for Mars stock. So the point of this is that at any point, if we hit the yellow, we can easily find resistance and we can be rejected back down to the discounted portion of the accumulation range, which will be roughly $15. So far, that's a very discounted portion for the range we're in. So at any point, it can act as resistance, but the majority of the resistance, and I like to use um, overlapping indicators, this one being a simple retracement acting as resistance from the swing high down to this swing low right here. Retracement acting as resistance, and then a value gap, which can, and they usually tend to act as a magnet, especially in Bitcoin. It fills in most of the time. In Mars stock, on the bigger pictures, we still have a ton. Like we have a value gap right here filled. For the most part, they all tend to be filled. And now I'm very curious because we had one here that's noticeable that was never like this one right here filled. Um, these tend to like work out pretty well. There's one right here that was filled here. This one was never filled. But it looks like that was a good indicator acting as support down here as well. So it's just noticing things like that, right? So what this is telling me is that like, hey, if we don't come down here sooner, I mean, eventually I do believe Mara will break this line down. But that's going to be mainly when Bitcoin enters the bear cycle, because then Mara's revenue will actually start decreasing because it will continuously trade at lower prices until the bear market's over. So I mean that's going to influence a lot of bearish pressure in Mara stock. It makes sense. It's not completely correlated, but it's a very big factor for those bear markets, especially if you guys go like on the daily, weekly, or monthly candles. You're gonna notice lower highs forming every bull cycle top. So I mean, once we have like pretty good indication that the bear market has started, like Mara tends to become a really really easy stock to short. Um, but again, instead of being hopeful or like trying to time it, it's simple. Is how high can we go before we can break an uptrend, the overall bigger picture uptrend to go lower? So this is my risk management right here, right? We know the SLs is down here, roughly 1345, right? And then for the higher price action, well, it's simple, right? And instead of so this is so far the how high the price could potentially go, anywhere from $20 to $25, right? Anywhere in here. But in order for it to go up there, we have to have enough momentum to break past these resistance zones. So right now, since the value gap and the resistance is overlapping, $18 to $19, this is a very very strong resistance area. Also, bigger picture supports. So if you guys look at this bigger picture support, is now acting as a resistance because we had macroeconomic fear that broke the big picture support, and now it's sort of acting as resistance. So again, 18 and 19, super strong resistance, but until we go up there, we have to have a sustained break of structure out of this zone. And before we have that, well, we need to, so resistance for this sideways channel, I just put it right here. That's what makes sense to me. Support right here. So the numbers are roughly $15.08 for support, and then roughly $16.23 for resistance. The point of this is to illustrate, not to like guarantee where the price actually has to bounce from, but it's just to give us an idea that hey, once we reach this resistance, so far price tends to reverse back down. Support, it tends to reverse back up, right? Every time it breaks past one of these lines, it's a really strong indication to potentially look at shorting or long depending on which side we're on. So, for a few weeks now, I've been calling longs and shorts on this stock, and it's been working out really nice. There's been a lot of trades locked in within this sideways channel, and um, excuse me, a break of structure will look something like this. It will look very simple, where we break below. So a good example will be this one right here, where we broke over and we tried holding it as support, but it failed to break the swing high. See, if we broke over that swing high, that's a strong indication that we could potentially be looking at um, a breaker structure to the upside, right? And then we're looking at signs to see if the candles are actually being healthy, if the RSI is backing it up, and then of course what's going on in the macro, and Bitcoin as well, and seeing if there's some kind of like warning signs as well when it comes to that. The downside will be simple: breaking support, acting as resistance, and then we continue and break the swing low. It's as simple as that. Until that happens, the way I'm approaching this is, quite simple. Right now, I've called, like last week, I called, hey, if we break below this swing low, it's maybe a good opportunity to accumulate some longs, rather it's calls or the equity itself, because we unless we have a break of structure, chances are we're going to go back above the support line, break over the 120 moving average, and potentially get even, as you can see, it can just be a wick. That's why limit order is so important, to sell and take profit. So the moment we just get any price action, like above $16.20, like it may be a good idea to just lock in and not be hopeful, because you know we can just reverse back down quickly. So it's as simple as that. And then SLs are simple. SLs, if you want to be like a lot more flexible with it, you can even use like the bottom of whatever your support lines are. For me, it's $14.30, or you can just use um whatever the last swing low was, or the overall major swing low within the sideways channel. Same thing on the upside. SL for shorts can be either a more conservative swing low, or swing high, or it can be a more extreme swing high. It just depends on your risk management and like what you're looking at. But as of right now, it's simple. Before we jump into Bitcoin, it's just, we're looking at, we're we don't have a break of structure. Like we're within an accumulation support area on the short term. Like we're trading the sideways channel still. The sideways channel has not been broken. So the idea here is that we can dip below support easily. Like as you can see, like we went over resistance 3 times before actually coming down. The idea here is that it doesn't matter how long it takes before we actually break back up and go into the more premium section of the sideways channel. The idea is that unless we have a break of structure sustainably to the downside, every time we're below this support line is a good opportunity to accumulate longs. If we happen to get that sustained break of structure, great. Your SLs, that's what they are for. But as long as we're around this area, it's a good opportunity, in my opinion, to go up. I said the same thing when it comes to shorts right here, right? It's like everyone's freaking out. It's like, hey, the price is holding strong. These shorts may not work out, but it's like, hey, do we have a sustained break of structure? No, we don't. So there's just no reason to be fearful. Let your SLs like do their thing for whatever. So the idea here is that as of right now, it makes sense for the price to go back up into the low $16 range, around 16.20, before we start seeing strong resistance. It's as simple as that. And then once we're up there, same thing, but to the shorts, right? When it comes to Bitcoin, the thing is, this is actually very, very interesting, right? So what I'm doing right here, I'm not gonna like overcomplicate it or anything, because there's actually nothing to overcomplicate. But in the bigger picture, right? Because that's how we started with Mara. I'm gonna show you guys. We are in an overall uptrend. We're still in a bull market, right? The bull market has not ended yet, has not been confirmed to end yet, and we're actually holding support really nicely. So what I have here, and don't get overwhelmed by all this. This is just to help me keep track of certain value areas so that I can explain them better for you guys. So basically what this is that every time I have red, that is a opportunity for a higher low to happen. And this just, this represents accumulation opportunity. The difference here is that every time we have these accumulation areas, I like to back it up with a overlapping extension to the downside to see where the likelihood of us finding support can actually be. So in this previous example right here, we went all the way up, we made a new all-time high at that time, and then the price started coming down. I had this overall retracement. I like to use bigger picture swings to establish these very conservative, um, support areas. And what we have here is, of course, we're downtrending and we finally got some price action into it. So within every smaller picture, there's always opportunities to capture small trades, but that's just noise, right? I'm more focused on the bigger one. I usually represent that with red and orange for the most part, and then blue for like, hey, how, blue for this could be an actual opportunity for the price to actually finally break up higher. I'm going to explain that in a moment. But we had this overlapping area here. It was just following this price trend, right? 3 waves, or just 3 points, I should say. 1 being the start, 2 being the swing low, and then 3 being the lower high before we had to break a structure. We came down, breaking the swing low, so we had to break structure to the downside. It created this blue support area. The point here is like, hey, at any point within this area, we can find support and start going up higher. It just makes sense, just based off of investor sentiment levels. It's as simple as that, right? And then, of course, the bottom of these areas, the bottom of these fibs, they can act as an SL depending if that fits your risk tolerance as well. But we did find support within it, and we went up higher. As we were going up higher, and we had a bullish confirmation, which was simple. The price breaks up into short-term resistance, which is this blue area, and this is going to make sense because it's very similar to this one. It's this blue area. The price breaks up into it, and then it actually holds a higher low and breaks past it. We did that. We had another opportunity to come down. I was tracking the higher low potential with this yellow sub, or this yellow support line fib tool. We came all the way down to the 0.5 retracement, held support, go up higher. I had this orange area drawn out well ahead of time as where we could potentially find strong resistance. The idea of this bigger green one is to show like, hey, each of these lines in a bigger picture. So this is my conservative bull market cycle top. Each of these lines, so each fib level line, is just an opportunity for me to lock in the majority of swing trade profits as a way to reduce my position and actually lock in profit. And as I reduce my position, if we just happen to have a massive crash, that's why it's so important to lock in profits where it makes sense. So we eventually topped out. So if you guys remember, actually, I took a trade within this yellow as a long for an opportunity for a higher low. It didn't work out. I kept saying the moment the price breaks below the 0.618 line at 116.7k, it can easily close the gap to come down to our overlapping support area. This is the next stage, and it's another accumulation zone. So that's where we can go. And then if you guys remember, I closed out the position the moment the price broke below this line, and I only lost 5k on that trade. See, like, I could have lost a lot more if I was being hopeful. The price has not even recovered back up to 116.7k. See that? I mean, it did right here. But I mean, it broke it and it came down, and like this announcement that happened when there was a meeting with the Fed, like it didn't have to do this, right? So I got out, I lost only a little bit, conserved capital, and I can focus on setting up for an even better trade and more attractive opportunities. We came down, I've been accumulating within this red area, and then we were seeing weakness. We filled the value gap, which is all the way from back here. We finally filled that value gap, and we came down a little bit, broke below the support line. So what I did for you guys, just to illustrate it, this red extension area is another support area, but it's showing that the price has the potential. So this structure is simple. It's using 3 points from the swing high down to the swing low, and then the last swing high before the price came down and broke the swing low right here. It gives us this area as a strong accumulation point. The reason this is important is because in an even bigger picture, and this is like in my opinion, really good risk management because it's telling you where a lot of the value could potentially be. And these purple areas, I meant to make this one purple in the past, but my color coding isn't the best. But purple represents short-term deep value, like crazy buying opportunity. It worked out really nice here. It acted as perfect support right here, and now we have a break point. So it can happen this week where we have a bullish confirmation, or we come back down and go into the purple. Both of these are good. They both lead towards higher prices. So let me explain. I've been accumulating IBITs. You guys already know it's 75K. The position is pretty much flat right now. It's been flat for a while. We've just been like up and down right here. So here's how I'm approaching this, right? Here's my risk management. So I never put into a trade more than I am willing to lose. So what that means is that, okay, so I accumulated this IBIT position in my accumulation zone. Okay, so that's done. So now we're waiting for this announcement. We're waiting for this data. It would all come out within like the next like 8 to 10 days or whatever it is. So the point here is that if whatever comes out, whatever everyone thinks is going to come out, whatever does actually get announced, if we come down, it's going to easily, in my opinion, if we break below this yellow support line, which is a simple retracement from the swing low to the swing high, if we break below 109.6K, chances are we will just break below the swing low, form one more low into short-term deep value. So what I'm going to do there is, yes, IBIT will be in the red a bit, but I am completely okay with this because I understand that there's a very major important support area right here. If the price breaks below 93K, chances are like there's something going on with the bull market and it actually could potentially be over. And then from there, everything gets closed out. I'm not losing much because IBIT is not leveraged. This is actually just, so it's only going to be roughly a little bit. Okay, so I think that's a little bit more than 15, roughly 15 to 17%. That's completely cool, right? So that is my plan. I'm cool with it. So there's no reason if the price comes down to this area, I will not be freaked out. Instead, what I will be doing is, so my risk is really low right now, right? Because I'm using IBIT. It's not leveraged. If we and I said this many times, if we come down into this purple area, I will be then complementing the IBIT position with BitU shares. So I'll be buying BitU 2 times leveraged Bitcoin long ETF. I'll be accumulating into this area, and then I'll continue accumulating. If we break the 0.5 and 99.5K, I'll be accumulating because at any point, even up here, it doesn't matter. If we come into the purple, we can recover out of it very, very quickly. We saw a quick recovery out of this one. Out of this one didn't even break into it, just acted as perfect support right at the top. It's hard to show you because I don't have the subscription on this, but this deep value purple area way back here, this was in 2024, by the way. Crazy opportunity because the price went up dramatically after coming out of that deep value purple area. So as of right now, because there's, like this is a great opportunity in my opinion. I'll be accumulating like crazy. If instead the announcements, all the data comes out and it actually starts pumping the stock or pumping Bitcoin, the way I'm approaching this is, okay, I would not add BitU because it's just pumping. I would only add BitU when the price is actually like really discounted in the short term, and a pump up would be very much likely to just complete a bigger picture retracement, and that's a solid trade, especially if you're backing it up with what makes sense to you, and you know where your SLs are and your take profits are. But as of right now, this IBIT position, what I'm doing is if the price goes up, the data comes out, the announcements comes out, the first one comes out after tomorrow, so on Wednesday, what's going to happen is the price goes up. If we hit the 0.5 retracement at 115.9K, I will be reducing the IBIT position by either 25 to 50% because this is a resistance area on the bigger picture. It's a simple retracement resistance, which means that I am not here to be greedy. It doesn't matter how much optimism there is in the market. Do you guys do any of you remember the amount of crazy optimism right here, and the price is going up, and they're like, okay, cool, it's gonna go all the way up to 150, 200K. It 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 went up into resistance. It got rejected, and we just came down. And then no one's being optimistic anymore. See, like things can switch very quickly. So if you have a clear, so for me, clear indication of resistance is within this area. I will be selling portions of it, starting at the 0.5. I will be selling portions and selling portions, and we have strong resistance right here as well. The point of this is that we can see if the price goes up, we can see a retracement. I'll follow the price higher from the swing low. I'll follow the price up higher with a simple retracement tool. This will tell me that, like, hey, if we do get rejected, it could potentially come down all the way to support. So far, I updated this 3 times, and it's acted as support very, very well. We're still holding higher lows. Technically, if you guys want to be like technical about it, there is like a potential bullish triangle where it's like pushing higher, and then it'll eventually pop out of resistance and go up higher. So like that's something just to keep an eye on. But the idea here is that if we go up higher, I know where I'm shaving the position and locking in profits, and then I'm keeping track of it. It doesn't matter if it continues to go up higher. That's why I'm not closing out the entire position. I'm risk managing, right? If I'm in the profit and we're in resistance, why am I just gonna sit there? I'm gonna lock in some profit. So when it comes down, so let's just say the price goes all the way up to exactly the 0.5. I will not add back to that position. I'll let it keep running with whatever shares I have. But if the price does come down and goes back into support, then I'll be reaccumulating within support. IBIT. And again, BitU is only if we break the swing low and we're in the purple area for BitU. But that's how I'm doing it. I'm locking in profit as we go up, and then when we come into support, I'm adding, and I'm just adding slowly, right? So I'm selling within profit. I'm adding within support zones, conservatively, and I'll just keep doing that as we continue to go up higher. See, it's just locking in profit, getting back in for the potential of a higher low, but not getting in completely in case support's broken. So then you can reaccumulate and just really manage that position really well. At least that's how I'm doing it. When it comes to this specific swing trade, right? I want to make a video soon enough. I'm trying to figure out how I want to illustrate it, but I have a few different trading strategies that I take advantage of depending on the time frame I'm looking at. They're all like super conservative. They're not like super aggressive or anything like that when it comes to like my approach. So I want to try to get that out for all of you soon enough, for those of you that are curious. But I hope you guys enjoyed this video. I'm still looking for much higher prices in Bitcoin. I'm looking for a new all-time high like this year. But remember, we are still in September and it's a weak month. October, it can potentially switch around, but it can switch around at any point. But again, I don't want to get too ahead of myself. I'm just going to be holding on to this position until one of these two things happen. And of course, that's going to be highly influenced by the data that comes out. And then rather not, if we have a rate cut, it'll be a 0.25 or a 0.5. 0.50. So we'll see, right? So I hope you guys enjoyed this video, and I'll catch you guys on the next one.